Bitcoin maximalists will tell you altcoins are a scam. Solana fans will say Ethereum is slow and finished. Ethereum holders will tell you Bitcoin has no utility, and Solana will go down again next week. Almost all of those opinions share one trait. The person saying them is already holding the coin they're defending. That is tribalism, not analysis. Before we go any further, this is not financial advice. I am not a financial advisor, and you must do your own research before investing. I hold crypto. I tell you that up front so you can weigh my perspective accordingly. But I am skipping the price predictions and the moon calls. We are going to look strictly at the structural realities of these networks. The core dilemma for investors today is that Bitcoin, Ethereum, and Solana are no longer competing for the same job. They have evolved into distinct infrastructure layers, which means deciding where to put your capital requires a completely different perspective. To evaluate them, we will use a 5-criteria framework. We are scoring them on use case clarity, network effects, competitive moat, risk profile, and institutional tailwinds. This scorecard measures whether the world actually needs the asset, how hard it is to displace, what stops competitors from winning, the realistic bear cases over a 5-year timeline, and the structural forces pushing it forward. Relying on a strict analytical framework like this replaces emotional bias with measurable data. It is the only reliable way to determine which of these assets actually aligns with your specific financial goals. We begin with Bitcoin. Its use case occupies a singular lane no other network can replicate. It serves as a mathematically enforced, non-sovereign store of value. Its competitive moat relies entirely on its architecture. A proof-of-work consensus mechanism combined with a hard-coded 21 million supply limit provides decentralized network security that cannot be copied without building 15 years of credibility from zero. That 15-year security record has translated directly into massive institutional trust. With spot ETFs approved and sovereign wealth funds now allocating capital, Bitcoin has achieved a level of regulatory integration that secures its position within traditional finance. This chart maps Bitcoin's decreasing volatility against mega-cap tech stocks. Notice how the blue Bitcoin line stabilizes as the investor base shifts. The trade-offs are severe. Bitcoin offers zero utility for complex smart contracts, processing roughly 7 transactions per second, completely eliminating consumer applications. But for Bitcoin, the lack of rapid innovation is the defining feature. Scarcity and immutability provide the highest institutional certainty in an otherwise volatile sector. Ethereum operates under a completely different thesis. It functions as programmable finance and the primary settlement layer for the decentralized web. This bar chart visualizes Ethereum's $50 billion total value locked, holding deeper institutional tokenization than all competitors combined. Post-merge, it offers a staking yield, and during high activity, supply becomes structurally deflationary, providing a unique economic support mechanism. The primary risk to Ethereum over the next 5 years is internal. It centers on a dynamic called L2 cannibalisation. Ethereum relies on Layer 2 scaling networks like Arbitrum and Base to handle high user volume. The severe risk occurs when these Layer 2 ecosystems absorb the bulk of user activity and retain the fee revenue, slowly bleeding transactional value away from the Ethereum base layer. Ethereum commands the deepest developer ecosystem and institutional infrastructure in the market. Its long-term trajectory depends on whether it can balance that massive structural dominance against the internal threat of its own scaling architecture. Solana abandons base layer conservatism. It is built to serve as the high-speed execution layer for consumer applications. Its architecture prioritizes extreme throughput. Processing over 65,000 transactions per second, Solana enables real-time gaming, high-frequency DeFi, and micropayments without network friction. This trendline shows Solana's monthly decentralized exchange volume actively overtaking Ethereum's. Sustaining that lead for 10 consecutive months proves the network's speed and cost advantages are generating massive consumer momentum. However, pushing technical limits carries high execution risk. The network has a history of severe outages, meaning its future reliability hinges heavily on the successful implementation of the FireDancer validator upgrade. There is also a structural economic downside. Solana operates with an approximate 4.5% annual inflation rate. Unlike Bitcoin or Ethereum, this inflation actively dilutes long-term token holders. Solana captures the absolute highest upside for mainstream consumer adoption. To access that upside, investors must accept profound technical execution risks and continual supply dilution. Assessing these three networks side by side reveals that there is no single winner. Bitcoin, Ethereum, and Solana are designed to dominate entirely different sectors of the digital economy. Looking at these three verdict cards, we can map the assets to specific risk profiles. The capital preserver prioritizes low risk and seeks the absolute certainty of an institutional reserve asset. If your goal is long-term stability, Bitcoin is your allocation. The Web3 optimizer accepts medium risk for higher utility. If you want exposure to the structural growth of decentralized finance, institutional tokenization, and productive staking yields, Ethereum provides the deepest infrastructure. The high beta speculator is willing to risk drawdowns for maximum upside. If you believe real-time payments and consumer applications will scale mainstream, Solana is the direct bet on that outcome. Again, none of this is financial advice. These are analytical frameworks to help you map market mechanics to your strategy. I have put all the data points, metrics, and risk profiles into a free one-page PDF linked in the description. Download it and drop one word in the comments right now. Based on your risk profile, are you choosing BTC, ETH, or SOL? Successful investing over the next 5 years will not be decided by picking the loudest community. It will be decided by accurately matching the fundamental mechanics of the network to your personal financial goals.